Price formation with this new currency should get rid of the Western exchanges of commodities. In other words, they know what we are doing. They understand that we have been suppressing the price of gold for a very long time because it is the canary in the mine shaft. It is inversely correlated to interest rates. So if you have very, very low interest rates, like we did for 15 years, manipulated to zero, then the price of gold should go parabolic as it pays no coupon, no dividend, no yield, right? And that's what's so interesting about the fact that you have 6-month treasuries earning 5.5%, yet gold keeps going higher, and the dollar at the top end of its range, and gold keeps going higher because they don't care about any of that. They just want the gold.
The BRICS alliance is moving forward with plans to develop a common currency while advocating for the use of local currencies among member nations. This initiative seeks to mitigate the risks associated with reliance on the US dollar, as highlighted by South Africa's ambassador to China, Siyabonga Cyprian Cwele. AndySchectman, CEO of Miles Franklin, suggests that the new currency aims to establish an independent price mechanism free from Western speculation that has historically suppressed gold prices, which are inversely correlated with interest rates. Cwele mentioned that a working group comprising the finance ministers of BRICS member states would convene in May to discuss key issues and prioritize initiatives to enhance the stability of the international monetary and financial systems. Meanwhile, Russia's Deputy Foreign Minister Sergei Ryabkov noted that while a common currency is not a priority, progress could be swift, hinting at a potential solution within a year. Andy highlights the discussions within British nations regarding the common currency, which would involve two baskets, one for currencies and one for commodities, potentially including gold. Following the February BRICS meetings, Russia introduced the concept of a BRICS bridge platform for payments, with some members, such as China and the UAE, participating in similar cross-border central bank digital currency (CBDC) initiatives like mBridge. Franco-Nevada Corporation Chairman Emeritus Pierre Lassonde emphasized China's growing influence in the gold market, indicating that the marginal buyer of gold is now predominantly China rather than the US or Europe. This shift underscores China's significant role in determining the price of gold, as it consumes over 2/3 of the annual production. Come along as we explore AndySchectman's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Russian finance minister, and his name is Yuri Ushakov, and he was interviewed in the Russian news agency TASS. I go there a lot. They have good stories that really often I'll find before, you'll find this information a few days before it's even up in Zero Hedge. So anyways, what he was talking about is what I've talked about for the last 3+ years, largely because of what Sergei Glaziev has said. He said that he was talking about the common currency that the BRICS are working on. He says, yeah, the idea of the currencies, there'll be two baskets. We've known that. One basket will be currencies of all of the countries involved. We knew that. And the other will be commodities. Now, again, tier one asset and gold, it's probably going to be the main commodity. All of these countries, these BRICS nations, they're the ones buying it, probably going to be the main commodity. We've known that. None of this is new. He went on to also say that it will be a digital currency. Now, we've known that, so that they can sidestep SWIFT. It will be like the project mBridge, which I've heard you talk about. We just recently saw the first ever cross-border gold transaction using digital yuan on the mBridge, sidestepping SWIFT. All of this is nothing new. We've known all of that. Here's where it gets interesting. He says, the second part is price. For the moment, now he says for the moment, price is determined by Western speculation. We produce these commodities, we consume them, but we do not have our own price mechanism, which will balance supply and demand. It's impossible to make any strategic planning for economic development if you do not control prices of basic commodities. Here it is right here. Price formation with this new currency should get rid of the Western exchanges of commodities. In other words, they know what we are doing. They understand that we have been suppressing the price of gold for a very long time because it is the canary in the mine shaft. It is inversely correlated to interest rates. So if you have very, very low interest rates, like we did for 15 years, manipulated to zero, then the price of gold should go parabolic as it pays no coupon, no dividend, no yield, right? And that's what's so interesting about the fact that you have 6-month treasuries earning 5.5%, yet gold keeps going higher, and the dollar at the top end of its range, and gold keeps going higher because they don't care about any of that. They just want the gold. And it goes further than that. You know, they have talked about the Brics grain exchange. And in it, they say global prices are primarily determined by the Chicago Commodity Exchange. Moscow also seeks to move away from trading grain for US dollars in favor of the national currencies of the Brics member states. Well, you just saw China cancel a huge grain order with Australia and the United States in favor of buying it from Russia. They will pay for it in yuan, which is immediately convertible into gold, the only other tier one asset on the Shanghai Gold Exchange. They understand what we are doing. They get it. And a lot of what we have been seeing lately are these massive deliveries in Hong Kong, in China, at Brics. And it's interesting. And almost all of the Brics deliveries, huge amounts of them, are exchanged for physical delivery. And what's happening is they are using the Western price against us, and they are standing for delivery. They take possession of it at Brics in China and then move it right over to the Shanghai Metals Exchange. And what we are witnessing, in my opinion, is the fact that they realize if you can't beat them, join them. And that's what they're doing. They're beating us at our own game by using the suppression of all of the world's commodities against us. They're the ones accumulating them. They're the ones who are not bitching. And why would they not bitch? Because they're buying them all. And when no one is stupid enough to trust the Western prices anymore, that's when you get that.
China has recently escalated its gold buying spree, amassing a $170 billion stockpile amid growing concerns over a potential conflict with Taiwan. According to the World Gold Council, the People's Bank of China acquired 27 tons of gold in the first quarter of 2024, bringing its reserves to a record high of 2,262 tons. Andy highlights a trend observed in Eastern European central banks, where gold reserves are being repatriated and purchases increased. He suggests a link between these actions and the BIS's reclassification of gold, indicating a directive to bolster and safeguard gold holdings. In April 2024, China witnessed a surge in gold trading volume, spiking by 400% for the month. This coincided with massive accumulation by the People's Bank of China, retail investors, and institutional funds. Moreover, Andy criticizes Western nations' weaponization of the dollar, particularly the US, which he argues creates tensions and incentivizes other countries to diversify away from the dollar. Elon Musk has echoed similar concerns, warning against the weaponization of currencies and predicting potential consequences for countries that overuse such tactics. Let's get back to the interview.
What is behind this surge in accumulation of gold? Really, you could lay it at the feet of the West and their weaponization of the dollar. And, you know, if we go back to the previous crisis, 2008 and 9, really the central banks were just beginning to, or the gold market itself was just beginning to ramp up till it reached its peak in 2011. But it was a very, very different time in 2008. For example, the Fed had a balance sheet in 2008 of, I don't know, $700 or $800 million, not the $9 trillion that we saw it get ramped up to here over the last few years. But I think what's really behind the accumulation of gold, there are a few things. Number one, in 2019, the Bank of International Settlements, which is the most powerful bank on the planet, the central banker's central bank, they reclassified gold as the world's only other tier one reserve asset. And, you know, our media doesn't just do a poor job of telling us what's happening. They do no job. How many people really know that gold was reclassified tier one? Since the end of World War II in Bretton Woods, there's been dollars and treasuries as tier one assets. And then there's gold. After 75 years nearly of it just being dollars and treasuries, why would the central bank, the most powerful bank on the planet, reclassify gold as tier one? And interestingly enough, if you go back 2 years before that to 2017, you know, when nobody wanted any gold, when people just wanted Bitcoin and you know, S&P 500 and buying Airbnbs to, you know, real estate all over the country to turn into investment houses, no one was buying any gold. And in fact, in 2017, most of the sales that the industry were receiving were people selling, not buying. It was a very unusual time. But that's when the German Bundesbank made a very big deal about repatriating their gold from the New York Fed and the Bank of England. And within a few months of that happening, the Bank of Turkey, Hungary, Poland, the Czech National Bank, the Dutch National Bank, the Bank of Austria, all of these Eastern European banks said, yeah, we want our gold back too, by the way. And they said the same thing to the Bank of England. And in 2018, those same banks, who had most of which had been net sellers over the previous several years, bought more gold as a group than they did in the previous 60 years combined. In 2019, those numbers were almost up 100% by those same players. And then, lo and behold, it must have just been a coincidence. The BIS said, oh, by the way, gold is now a tier 1 asset. Makes you wonder, were they told, get your house in order, repatriate your gold and start buying it? Here we go. And this has been a trend ever since that is accelerating. And yeah, as you were saying, 2022 was a huge year, and 2023 was as well. In fact, over the last 2.5 years, the central banks have bought more gold than at any time in history. And when you have a central bank like the United States Federal Reserve, and the U.S. government, who find it appropriate to weaponize the dollar as the world reserve currency, it creates very, very, very big problems. And big problems in the respect that much of the world views us as being hypocritical. Where, for example, we can give $200 billion to the Ukraine, but Janet Yellen just does an interview with CNBC and saying, we have now warned China, we have put them on notice that if they give any money whatsoever, even though they're charter members of Brics and allies, if they give any money to Russia to aid in their war efforts with the Ukraine, we will not only sanction their companies and their banks, but also Beijing itself.
Chinese exporters are avoiding the yuan, opting to store their earnings in foreign currencies. This is contrary to BRICS' objectives to strengthen the yuan and other local currencies against the US dollar. How does the move by Chinese exporters to avoid the yuan and store earnings in foreign currencies impact BRICS' goals of strengthening local currencies against the US dollar? Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.